Tell you what, let's get off to a rolling start here. Okay, so this month's commercial forum, and again, this is just this isn't me up here talking for an hour and a half. This is a forum, a discussion, and so we're going to talk about all things commercial. The format for this month is the same as the format for all of the months, which is I've got a few news topics, things that are happening in the commercial real estate world, and so we'll kind of talk about that and talk about the impact that has. And so these are some recent news items, and I tried to hit all the major categories: office, industrial, retail, multifamily, and hospitality. And just with some news that's going on. So we'll talk about these, but I also want to hear things that you've heard or things that you've experienced as far as activity. I think in general, people are hearing that activity is really picking up right now, and it seems to be picking up across all sectors. Even retail, which was hit really, really hard, has picked up, and I've got a short article on that. So we'll talk about that. But again, this is a discussion, so I want to hear what you're hearing too. A little bit of gossip. Gossip is one of my favorite things in the industry. And, you hear about companies that are sniffing around and thinking about relocating to DFW, and that's always really exciting. I think I saw an article, and I was looking for the article for this presentation. I couldn't find it. But the guy who's head of the Dallas Regional Chamber, there's a Dallas Regional Chamber. There's the various chambers of commerce. But there's a Dallas Regional Chamber, which I think is really, really smart, where all the chambers kind of get together to promote DFW to the rest of the world, the rest of the country. And there was he said 3 times what was typical of a few years ago. There was something like 100 companies, 80 to 100 companies that are taking a serious look at relocating to the DFW area of all different sizes, and that was way more than normal, and that has done nothing but pick up after the COVID pandemic and all of that. So there were a lot of companies that made an immediate move, and then other companies that are have talked about or waited for, if you will, things to die down and are picking that up. So anyway, we're going to talk about that, what's going on, and then we do a little education segment. I tried to do an education segment each time. We did lease structures, triple net leases, whatever previously. What was the other? We did lease structures one time. We did.
Kind of went over the contracts one time.
Oh yeah, contracts and what have you, key things to know and areas of concern and all that. So anyway, this one is going to be identifying commercial opportunities. And so whether it's you're just looking for potential opportunities to refer to a commercial agent, or you're thinking about getting into commercial, or you are in commercial, how to identify different opportunities for lease and for sale. So we'll touch on that, and I want to hear feedback from folks out there who are doing it, and what works and what doesn't work. And then after that, we'll just do a Q&A, just discuss all things commercial, any questions or things you hear or what's going on in the commercial world. But first, before we get started, we have a lunch sponsor, Prosperity Bank. We want to thank them for the lunch. It was great. And they're going to talk to us a little bit about commercial loans, what they're seeing in the commercial industry, and also for their bank in particular, what they like to focus on and what their preferences are. And we can, if you have questions about anything regarding commercial lending, and obviously that's a key part of what we do, especially with purchases, now's your opportunity to ask. So Mary, did you want to come up here and introduce your Would it be boss or guest
Boss is
speaker? Or?
boss is boss is boss.
Oh, okay, wow, we're on it. Okay, and so for the Zoom people out there, we need to pass the microphone.
Okay. Well, good afternoon, everybody. How many of you were at our 1031 meeting we had? Aha, I do see some folks. Okay, so I just said a magic phrase, 1031 exchange. One of the things our bank does is those, and in your business, you're going to run into buyers who want to do that. So just know that we can handle that at our bank. So just thought I'd throw that in there. Again, I'm Mary Badowski. I'm Senior Banking Center Manager at our Richardson location, which is right down the street at Bowser and Arapahoe and Richardson. And we're actually the banker for this company. So we are very lucky to get to work with you guys on an ongoing basis. And I've been in and out of here for quite a long time. In fact, I was here at the grand opening of this location. So I know you guys pretty well. I'm also a licensed realtor, so I understand your pain. And I know that none of you ever want to retire, right? No, you don't want to ever. Our specialty and my specialty is consumer and business lending. And my job is to develop new business for our bank. So anything to do with money, my business card is there, you call me. Okay, anything to do with money, I'll answer your questions or find out the answer. Also present with me today is Angela Webb, who is our DFW area sales manager and my boss. And we did color coordinate. Yeah.
I don't know how this happened, but great minds think alike.
We did. Wanted to tell you too, and I really appreciate you being here and your support. Thank you. Wanted to tell you a little bit about our bank. We were a preferred vendor here at Keller Williams as Legacy Texas. You might remember that name. And we merged with Prosperity Bank. It's been a little bit over a year ago. So I can't believe it's gone that quickly. Time flies. The Prosperity Bank was founded in 1983, and it kind of grew exponentially by buying up small community banks all over the state of Texas and Oklahoma. The bank is based in the Houston area. We have about 275 locations in both Texas and Oklahoma. And our asset size, just so you know, is about 35, 36 billion. Depends on the hour of the day, but grows. And I'm very, very lucky today to have a wonderful resource for you and for me with us, and that's Bill Dunn. He's chairman of our DFW region. He's been with the bank for about 5 years. Prior to that, he was in area and statewide management at other local banks such as BB&T and Capital One. Prior to that, he was a bank controller. So he's been around and he knows some stuff. His current role is to lead and manage Prosperity Bank in growing its presence in DFW, and as well as us being a strong member in the communities that we work in and serve. He's a graduate of finance from Texas A&M, and he's married and he has 3 children. And please help me welcome Bill Dunn. I have to trade. I have to give this to you. Yeah, you get the necklace.
Thank you. All right, hello. You know, feel free. No, I definitely looks like I don't need this. So if y'all don't mind, I'll take this off. For those of you on Zoom, I'm taking off my tie. Thanks, Mary. As she said, I'm the area chairman for DFW North Texas, and essentially over the bank. You know, pretty much all the banking lines of business, and have been with Prosperity for about 5 years. The Legacy Texas deal, first of all, it's far and away the largest acquisition that we ever made, and number 2, it vaulted the DFW market to where we're now the largest area market within the company by a good amount. As she said, we're headquartered in Houston, and Houston's historically always been the largest area, but since we acquired Legacy, which was they were a $10 billion bank on their own, that we are now the largest. So we have a very active interest in the Dallas-Fort Worth market, the whole metropolitan area. And we're absolutely wanting to grow our market share here. This is now in my opinion, the most important market to the bank. So we are very active lenders, and we have historically been more of a real estate lending bank. Now, the good thing about, one of the good things with the legacy acquisitions, they have historically been more of a C&I bank, commercial and industrial, operating lines of credit and things like that. So it helped balance out our portfolio some, but still to a large extent, our portfolio is predominantly real estate based, and that's commercial and consumer. We are a large mortgage lender. We do a lot of consumer mortgages, and like a lot of banks, we sell off, some, but we keep the vast majority. As a matter of fact, we're keeping more than we used to. And on the commercial side, we pretty much do all of it. It's we have no problems with construction lending. That's obviously in Dallas-Fort Worth. That's been a big deal. Some banks like to do the loans on existing properties. They don't like to do the construction. We don't have a problem. We do a lot of construction, commercial as well as consumer construction. We do a lot of owner-occupied real estate, but we also do a lot of income properties or commercial real estate, just office buildings, with tenants, strip centers. We do a lot of multifamily construction and lending for multifamily properties, and that really, we've done some as small as we just recently did one for 2 4-plexes, and then we've done them up to 300 to 400 unit multifamily, deals for north of $50 million. So we really run the gamut. If it's real estate, there's not much that we don't do on the commercial side of the world.
Bill, you mentioned, and I apologize if you already said this, do you all do SBA?
Yes, absolutely. We do quite a bit. We've got a very active SBA department. In the last year, like most banks, actually a little over a year, they got hammered with, I'm sure you all heard of the PPP loans, and that's kept them running. But no, we do quite a bit, and the vast majority of our SBA lending historically has been the 504 program, which is generally the real estate deals, because again, our preference was to do real estate deals. And there's not many industries, that we haven't done historically. We've even done a fair amount of hotels, hospitality, and some restaurants, which some banks don't really like to do. I will tell you right now, with COVID, we're not looking to do any hotel loans. Yeah, we actually, we have a few that are very good customers of ours and have continued to do really well. And 2 of them we recently did loans for, so yes, we have for some of them, we've got, and obviously we have some that have struggled, but we've been fortunately selected, I think, some of the right ones that were good operators and mostly DFW restaurants, but multiple locations within DFW typically. But yes, as a matter of fact, I haven't honestly seen us do a hotel loan this year, but I have seen us do some restaurant loans, and everything from a pad site. Again, we've done where they own the property, and then in some cases we've done one where they're leasing the space and they just need a tenant improvement, FF&E kind of a thing. But it's the market as a whole, it's been kind of crazy, as you all know, over the last year, to say the least. But things are picking up, frankly, not as much as quickly as I would like. We are absolutely looking for loans. deposits haven't been a problem, but all the banks have pretty much been growing deposits. A lot of that is because of the government stimulus that has come out. It's basically making its way to people's bank accounts. Spread a few $1 trillion over the course of over the country that it moves the needle. So
Trillion there. Pretty
yeah.
soon it starts adding
yeah,
up.
that's exactly right. That's funny. I used to say that about $1 billion, and now it's a
Yeah, I
trillion.
know,
Yeah, that's
what-
right.
who was
Yeah.
It was the senator from Arkansas. a long time
Was
ago,
it?
said
Yeah.
billion here, billion there. Yeah.
But so we're doing so we did a lot of PPP loans. Those are now in the forgiveness stage. We did a bunch of them last year, then we did a second round this year. And now the ones from last year are being forgiven. A lot of those were operators of some of these things we're talking about, restaurants, hotels, every type of business just about that you can think of. But again, the market it's what I've seen on the commercial real estate side. Industrial has remained pretty strong, industrial warehouse type of properties. There still seems to be some growth and loan opportunities there. Multifamily, it slowed down for a little bit last year, but it seems to be back to a large extent. But there don't seem, in my opinion, they don't seem to be as many players, I guess you could say, doing the larger multifamily. It seems like the bigger companies are kind of doing those. But we've seen some. We just did one for somebody that was doing 8 townhomes in East Dallas, and then so we're seeing some of those deals where people have some pockets of property and they're
Development
doing.
loans or
Yes, yeah.
or redevelopment loans?
In this case, it was they tore down a couple of old. They bought 2 lots next to each other. They tore down a couple of old houses and built 8 new townhome units. So we did the construction and permanent. And all over. I mean, that was in East Dallas. We looking at another deal right now in Princeton and really all over in North Richland Hills and Argyle and there's stuff going on all over DFW. But as far as owner occupied, we, like a lot of banks, love those. We'll do those all day long, and those things go in cycle mostly because of interest rates. And interest rates, when interest rates really started dropping, just like on the personal home side, people started refinancing. So there was a rash of refinancing. Well, now rates have been low for a while, so people who are in owner occupied buildings they've been in, if they refinance within the last couple of years, they're probably not looking to refinance again because they're not going to get a lower rate, than what we literally are essentially, from a Federal Reserve standpoint, at as low a rate as we can go. The only way the Fed could go lower on the Fed funds rate is literally if they went negative, and they have said we will not go negative, even though some countries have.
Japan did that.
Yeah, Germany too. Hard to believe. It's like, okay, put your money with me, and then you got to pay me interest. So, but it's so we've got, again, deposits are heavy, which is great. That means we've got plenty of money to lend. So we are looking to try to find opportunities, and the owner occupied is the most common deal we do, but we do a lot of a lot of our owner occupied is physicians. They'll do a medical condo, or else they'll do an office suite where, okay, I'm going to take the first 2 units and then the rest of y'all, I'll lease out the rest. We see quite a bit of that. Love those deals. We don't do a lot of what I would call large healthcare. We don't do a lot of hospital lending and the huge multi-facet office buildings. But other than that, we do healthcare. But again, things are recovering. Post COVID, we're seeing more activity, but frankly, would like to see more. So, y'all have anybody have any questions, or are the Zoom questions? I don't know how theirs will come in, but Yes,
Are you just in Texas or are you in other states?
Texas and Oklahoma. We will do stuff outside of our, that's technically our footprint. We'll do stuff outside of our footprint, but it's usually for a customer that's in our footprint. So we, we've got some good Dallas customers that develop stuff elsewhere.
Okay.
But
Do you have a limit with the dollar amount for loans?
on the high side, yes, but I've never seen us come anywhere close to it.
Really?
Yeah, we are, one thing is different, a little bit different about Prosperity, especially on real estate, more so than on C&I. We generally like to hold as much as we can, if not the whole thing. It's rare before we will participate alone and start bringing in other bankers. But the largest loan I've seen us do where we held the whole amount in our bank, it was right around $200 million.
Sure.
But our
It's your
lead,
oversized deal, Kimberly.
yeah, yeah, but that's, oh, absolutely, absolutely. We do those all day long. Mary, Mary works on those kind of loans just on a daily basis. Our turnaround time, I feel like on those deals is much quicker than most banks too. We've got a very quick local turnaround time on those. And but again, on the high side, our legal lending limit is, gosh, I don't know, probably 3 times what our, it's, and I threw out 200 only because kind of you asked what's the top I'd seen, but those are very rare. Most of the time our bread and butter, a lot of time it's that up to 5 million, but we do a lot of deals well north of that. But as far as number of deals, that's kind of our bread and butter. Anybody else?
Well, Bill, thank you very much.
Yeah, thank y'all. Appreciate it.
And thank you for lunch.
Oh, you're welcome. You're welcome.
Thank you, the microphone for the
There you
time.
go. Yeah, that's right. I've been wanting to take that off.
Yeah.
I apologize. I've got to stepped out of loan committee. Now I got to go back to the loan. Every Thursday we have loan committee. So, but again, we'll turn things around.
Well,
I appreciate it.
Thank
y'all.
you.
Thanks a lot. Okay, all right, so let's move on. That was good information. Hey, Joseph, how you doing? Hardly recognize you.
Right?
The beard's getting a little longer there. Okay, so let's talk about what's happening and some of which, oops. Let's try that. I don't know why that's not working. Okay, so anyway, it's funny, he mentioned multifamily. These are stories really that in the last couple of weeks, and there's been a ongoing number of stories. Where did I do with that? Yeah, even this morning, I'm one of the 5 people who still gets a daily newspaper and actually reads it every day. And if you want to keep up on what's going on in commercial real estate, Dallas Morning News, get an online subscription, whatever. We've got a great commercial real estate writer, but he does a lot of stuff on commercial real estate. His name's Steve Brown. If you're not familiar with him, he's been around for coming on 30 years. He's been the real estate guy. And he probably puts out 7 to 10 or more stories a week on things that are happening. And I just grabbed the paper. This was from this morning, and I think I counted like 5 different real estate stories, commercial real estate stories, one on hotels, which they haven't quite recovered yet, one on shopping centers, which I have up here, another on multifamily, another on some industrial developments. And by the way, and I'm assuming everybody here is either is interested in commercial. Hopefully you didn't come just for the lunch, but is interested in commercial in some capacity, whether you want to do commercial real estate, you want to be a commercial real estate agent, you want to be a residential agent, want to dabble in commercial or whatever, or I want to know enough about commercial so that I can, and this is really kind of the topic after we get through the news stories, I want to know enough about commercial so that I can identify deals and maybe refer them to a commercial agent and collect an easy referral fee. So for whatever reason, it is, I think it's important, especially if you're focused on commercial or even residential, to keep in touch with what's going on in the market. Not just for the potential it might be for business for you, but also when you're meeting somebody, when you meet a new client or new potential client, just being able to converse about what's happening in the market and sounding knowledgeable about it is going to increase your credibility with that client. No, you don't have to remember that office vacancies in the Stemmons corridor are 18.7% or what have you. That's not what I'm talking about what things that are happening in the market, where the markets are trending, and the kind of stuff that we're going to talk about up here. So this one is really interesting. In the second quarter, there were 15,437 net new rentals in multifamily properties. So net new rentals, that means at the end of the second quarter, there were 15,000 more leased apartment units than there were at the beginning of the quarter. That's phenomenal. That's incredible. We have, and there's something like 30,000 new units in the pipeline, in the construction pipeline right now. And of course, that, if that continued at that torrid pace, we'd have all of that leased up in 2 quarters and a half of a year. So that is a big pickup from previous quarters, and we were already very, very hot. And not only that, but see if well, this doesn't work on the laser doesn't work on a screen. But anyway, the other big thing here in the second quarter, rentals, average rentals jumped by 7% in 1 quarter. So part of that is as demand increased, some of the concessions and things that were some of the apartment owners were giving, and especially new developments, have gone away and have decreased, but average rents up 7%, which is phenomenal. Let me see. I think I jumped ahead too. Okay, on the office sector, I thought this was an interesting statistic. And by the way, this was a brand new story. I just added this. This popped up this morning, which is more than 50% of DFW office employees are back to work. And I thought this was an interesting statistic in terms of office usage, and to just compare Texas, let's say, with other markets in the US. These 3 lines, I don't know which color is which, but they kind of parallel each other. But they represent office occupancy, how many people are going back to work. And we can see 0, here's 50%, 100%. So for Dallas, Austin, and Houston, we're all around 50%. And New York is a little over 20%. And a lot of other markets, haven't recovered quite as well as ours have. And that's going to continue to go up. And at some point, yes, it's going to hit what it was at pre-COVID levels. And yeah, it's going to be a little bit different. There's the whole co-working thing going on and collaborative space, which, by the way, there was an article in the paper today, lose things so easily, about VentureX. I don't know, there's a bunch of co-working companies, VentureX, Common Desk, which is a Dallas outfit that I think is now has expanded to Austin, and I don't know if it's gone out of state. And of course, there's WeWork and Industrious and some others like that. But there was a partnership between VentureX and remember Veridesk? The people who originally did the, Veridesk expanded, and now they do whole office units, including walls, movable walls, desks, everything. I went out to their plant. They did a presentation for brokers, and it's really phenomenal what they've done. And so VentureX is adding new locations, and Veridesk is going to partner with them to do some of the interiors. And some of the discussion about where office space is going to is that in the future, a company, rather than leasing 40,000 square feet, 2 floors of a building like this, let's say, instead they might only lease 25,000 square feet, but in a building that also has collaborative space, let's say a Venture X or WeWork on a couple of floors, so that they can add employees or subtract employees and have some flexibility built in. So what is that going to do? Ultimately, with office occupancy, again, eventually we'll get back to where we were before, but how long that is, anybody's guess at this point. But we'll get there before, we'll certainly get there before New York. And it's funny, everything that's old is new again. So now, post-COVID, people are talking about, rather than these high density office buildings and high-rise office buildings, maybe going to more garden style, spread out and giving people more space. In fact, one of the counterbalances against whether or not we're going to use as much office space as we did in the past, whether we'll have more hybrid workers, some people working from home, some from the office, or switch back and forth. One of the counterbalances to that is that newer designs, office designs, are giving people a little more elbow room. So rather than squishing a whole bunch of workstations into a really small area and having people work shoulder to shoulder, maybe still having workstations, but a little more separation, each one taking up a little more space. Also, maybe more private offices as opposed to open area. So that could be a kind of a counter trend to the less office occupancy. But again, here's this one is a new office project. It's going to go up right near the intersection of 121 and the North Dallas Tollway, up at the northwest quadrant, just south of Hall Office Park. And here the idea is garden office and spread it all out. Something that, by the way, was very big in the 70s when I got in the business, right? So anyway, everything's old is new again. Industrial is strong and has been strong and is continue to be strong. This was something, net industrial leasing, almost 8 million square feet in the second quarter. So that's what, 32 million, if my math is correct, on a pace to 32 million square feet of absorption in a year. And we've been kind of at that pace for a while. And we have 30 million or so square feet in the pipeline construction. So there's a lot of that going on, especially the big box distribution warehouses in the southern part of Dallas along the I-20 corridor, I-45, and also I-35 going south. Also up in the Alliance Fort Worth area. Big box distribution. So that's been strong. Dallas Fort Worth has always been a big distribution hub, and even more so now. And again, you maybe heard me say this before, but we're a natural distribution hub because of where we are in the country. We like to think of ourselves being more in the West, but we're not. We're right smack dab in the middle of the country, in the southern half of the country, between the East Coast and the West Coast. We're strategically located for distribution that comes up from Mexico, that comes in through the Port of Houston, gets put on rail, shipped up to DFW, and then wherever it needs to go in the country, or stuff coming from the Pacific going to the Atlantic or the eastern side. So we always were a natural hub. And then with now the Amazon effect that had already started, of people ordering and just having stuff delivered to their home, which of course was put on turbocharge with COVID, that continues. And in fact, again, in this morning's paper, it says an Atlanta firm that does, Atlanta developer plans more projects in DFW, and they're starting several projects, and this is going to be their first entree into the DFW market. But this is a huge, and we're by far the #1 industrial market in terms of new construction anyway, and I think second in terms of absorption to one of the East Coast hubs. Yeah,
One thing that, I have a client, Houston, who's looking for huge refrigerated warehouses.
uh-huh,
Very hard to come by. I mean, we have, obviously a lot of distribution centers and, smaller square.
and it's expensive to do. It-
Oh, very
yeah.
expensive. And I'm
Mhm.
scratching my head for that. I mean, we're looking at, one client that's, in, mid-city area.
Mhm.
And we're looking for 55,000 square feet of refrigerator. Because they're a trucking business and constantly
Mhm.
delivering food and so forth. And it's just not.
Yeah, refrigerated warehouse is definitely a major subspecialty for the food industry. And it costs a lot of money to do a refrigerated warehouse too. So, if they have the capital, they can do that, but it kind of,
And it's very profitable because, they can lease them around, 18 to $22 a square foot. Versus the normal warehouse of,
sure,
$5 to $12 a square foot.
yeah. What's that? Yeah, yeah, no, I mean, I've known some folks who specialized in that in the past, and if you know who the players are, and the players, the big food distribution companies and what have you, yeah, it can be very, very attractive. Yeah, well, maybe that, so there you go. If they can't find it, Joseph will do a build to suit and lease it to them. And I bet you could find some investors to do that at the right price. Yeah. And I get 10%. All right. All right. Okay. So this was interesting. This just came out this week. Retail has picked up. And in fact, there was a chart. I didn't put it here. And by the way, this was a story that was in the paper this morning as well. So 3 of these stories were right from the paper this morning. But anyway, talks about absorption and stuff under construction. And then a couple of points in the article I think were real important. One goes to something Bill said about restaurants, and something that we all predicted, and I know we had talked about before, was that post-COVID, there was going to be some real opportunities for new restaurants. Because if you've ever worked on a new restaurant transaction, it's very, very expensive to take just raw retail space and turn it into a restaurant. You've got all sorts of code requirements with respect to plumbing, venting, specialized equipment, very expensive grease traps, et cetera. And with a lot of these restaurants going under, that is going to provide an opportunity for new restaurateurs, or maybe some of the same restaurateurs who went out of business, to start a new restaurant and move right into a vacant restaurant space that already has all of that built out. And so, building from a shell, just to give you an idea, building from a shell, a cold dark shell, brand new retail strip center, building out a typical retail space that sells, I don't know, shoes, might from shell condition cost $70, $80 a square foot, depending on the size and what have you. To build a restaurant in that same location might be $150 a square foot, or depending on the size, could be, for a smaller size, even more. And so having vacant restaurants that already have all that stuff in place, coming in, making a few cosmetic changes and opening a new restaurant is providing opportunities. And one of the stories that they made here was, or was part of this article this morning, was that they're already seeing this happening, that people are, restaurateurs are taking advantage of it. And I can tell you from a landlord perspective, if I put on my landlord hat, I'm not going to be as concerned leasing an already built out restaurant space to a restaurateur who, up until 2020 had run a very successful restaurant operation, and due to things outside their control, the restaurant didn't make it. Okay, but they've already shown evidence that they, know how to run a restaurant and successfully or whatever. I'm going to feel okay about, even though they had already gone under once, about doing another deal with them, especially since I'm not going to have to spend a lot of money to do that. So there's some real opportunities there. Rumor mill. I love the rumor mill. This is one I really like. Goldman Sachs has been, we talked about some of the things that go on that we don't know about behind the scenes, and companies that are looking, constantly looking in DFW area for relocations. And rumor mill has it that Goldman Sachs, which already has several locations here in DFW, is looking to build a regional headquarters, and potentially their largest regional headquarters outside of New York. Now, they already opened up another large regional headquarters in Florida during, I think it was kind of during COVID. But anyway, so that would be a big move. Let's see. Okay, anything else? Any other stories? Anything? Anybody see anything? How many folks are seeing their business pick up? Okay, and then if we had, there's lots of investors out there with a lot of money ready to spend, looking for multifamily properties, looking, but it's finding the right property or finding the off-market properties. What are you seeing out there, Joseph?
Yeah, we are actually looking at there's some LOI for a property west of Fort Worth, about something close to 50 million.
Who's that?
No, we submitted an
Oh, okay. Mhm.
probably close to 50 million. It'll be a syndication deal, but there's a lot of demand for multifamily. I made an offer for LOI for a retail property in Prosper. They have multiple offers on day one. Right? That property, funny thing, it was listed for sub 4, and the person who got it on the contract flipped it for another 200K. And they did a
No kidding.
double closing on that. So literally, people are finding ways to make money, and I didn't even know people did double closing on commercial property.
Yeah.
It's done on residential all the time.
Well, it's crazy, and I think it's going to continue to be like this. I think certainly through next year. I don't, unless the Feds have already said that they are going to take it easy on interest rate hikes, so that could be that's a big concern. I got into the business when there were big interest rate hikes back at the end of 1979, 1980, and it could absolutely destroy business, and a lot of people could lose property. So, with interest rates remaining low for the foreseeable future, inflation is a concern. If it gets out of control, that it's going to force interest rates up. But anyway, we'll see.
Can you talk about the inflationary effect on real estate? Typically, my understanding is if inflation is high, more money is going to flow into real estate.
Right. That is absolutely true. So an economic principle is in inflationary times, buy hard assets. Okay, since the value of money goes down and the price of everything goes up, buying a hard asset. An office building, multifamily property, those are hard assets. So while the value of your dollar may go down, the value of the price of your asset may go up, which is also why people, and you see the million commercials on TV, buy gold or buy silver or whatever, because that's considered a hard asset in an inflationary time. So you put your money into hard assets. In fact, I put some of my own money, bought some rural land in Texas. I bought 20 acres in the last 9 months. My brother bought about 120 acres, and the price of our land has already gone way up. By the way, since last year's craziness between COVID and all the stuff happening in the cities or whatever, there's been a big rush for people to buy land out in rural areas. And Texas set a record in the, I think in the fourth quarter, set a record. Was it the fourth quarter? Yeah, of something like 1.4 or 1.6 billion dollars in rural land sales. And the first quarter numbers just came in and it was over $2 billion in rural land sales. So I talked to and worked with, and we actually bought some property from a rural land developer. You know, they go out and they buy 1,000 acres and they put in roads and plat it out and sell it 10-acre tracts or 5-acre tracts or whatever. And they opened, so we'd already bought our land, and they were opening another development, 10-acre tracts, whatever, 15 minutes outside of Dripping Springs. And they had 111 lots or 112 lots. And they had their grand opening day, and they had a whole bunch of appointments set up and everything. And then for Sunday, that was on a Saturday, and on a Sunday, they had a whole bunch of appointments set up or whatever. They sold out on the first day, and they had to cancel all their appointments in the second day. And now they're about to open phase 2, only the price of those same lots is about 20% higher than it was on the first one. So everything, there's a lot of money, you know, chasing properties. And part of it, I think, goes to what you were saying before. I think there's a general understanding that in uncertain times, or especially in inflationary times, own hard assets, and commercial real estate is a hard asset. And people particularly like multifamily, because whether the economy is up or whether the economy is down, people need a place to live. And in fact, sometimes it's counter-cyclical, like it was in the financial meltdown when people were losing their homes. They still needed to live somewhere, so that increased the occupancy level in multifamily properties. So, yeah.
Yeah, I may have told a story,
Oops.
a real quick story. That I and 10 other investors back in 1995 went up in the middle of the rural land, bought 40 acres of piece of property, and we just left it there. You know, we paid taxes every year, and then I think back.
Forgot about it.
We forgot about it, exactly. And back in 2000, all of a sudden, the State Highway Department said they were planning to put George Bush Highway somewhere. They put out 3 plans. One was about 20 miles away from our property. Another one was like 10 miles, and the third plan was right smack next to it. And after a few months of, you know, going back and forth to improve that plan that it was right next to our property. So we bought back in 95 that land for 25 cents a square foot. And
You sold it for $10 a square foot,
Well,
no, whatever.
I mean,
8.
we sold it, just a portion of it, for $12 a square foot.
Wow.
You know, $9 million.
What do they say about land? They aren't making any more of it? Yeah.
It's unbelievable, you know. So there's not enough good advice about buying land.
Yeah.
Yeah, it's you can't do a development project because land is high, price is high, and the cost of development has gone.
Cost of construction, yeah.
So you can never make money if you build something now.
Yeah.
If you're in Austin, and it's all golden. You can do anything in Austin for.
Yeah, and having some kind of a limit, and by the way, for folks out in Zoom land, can you hear me? I think I accidentally hit a button on my sound thing. Oh, wait a minute. Test, test. I don't know if I did something there. Oh, well. Okay, I'm not sure if the sound is going through or not. But yeah, and that has a limit on new supply. So the natural course of development is that if there's great demand for something, and as vacancy rates go down, rental rates go up, and as rental rates go up, they pass a threshold whereby it justifies the cost of new construction, the cost and the risk and everything else associated with new construction. Well, even though there's a lot of demand, vacancy rates are going down and rental rates are going up, the threshold is much higher now because the cost of new construction, the cost of land and everything else is that much higher. And so if you already own property, that helps hold the value.
They can still hear you.
What's that?
They can still hear you, Quincy.
Oh, they can?
Yeah, just text someone.
Okay, good, good. That helps hold the value. And I've been in markets that were, and Texas was notorious back years ago with overbuilding. We would have development cycles where we would go nuts and overbuild, and lenders, I think, have learned their lesson too.
I have a question about an article this morning that was
Yeah.
out about that company that owns so much of the retail, and they, like JCPenney's, Eddie Bauer, they own all those brands. And they had an article about them going in Forever, is it Forever 21? They
Yeah.
had an article about them going public. But they own all this retail stuff, so.
Now, are they retail, they own retail real estate, or they own the retailers?
They own the retail real estate and they own the rights to use the names of the retailers.
Huh, that's interesting, because JCPenney is JCPenney.
Right.
I mean, they, no one, and they're going down the toilet, but nobody owns them.
Well, the company that purchased them was what they were talking about. this
Oh,
morning.
okay.
Mhm.
All right, interesting. No, I'm not familiar with that story. I'll have to look it up, though. Where'd you see the article?
I thought it was on CoStar, it's one of the drop things that they put in our,
CoStar? Okay, I'll check that.
in our email.
All right, and so moving on, our little discussion education segment, we want to talk about identifying commercial opportunities, and for those folks who are residential or residential, it is quite a bit different on the commercial side of things. You know, I've never been a residential agent, and so I don't know, but when I look at an aerial of a city or whatever, and I see all those rooftops, then every one of those rooftops is a potential, you know, assuming some of those are rented, but the majority are owned, and that those are opportunities for me to talk to them, and at some point they're going to sell and be a buyer and what have you. Commercial, we have so many different types of properties. We have office properties of all types, industrial properties of all types, retail properties of all types, and multifamily, and they're either owned or leased by all sorts of different types of companies or investors. So it's tougher to just zero in on one particular thing or do one particular thing or focus in on trying to gather up potential clients by casting a wide net. You really need to kind of focus in on where you're looking to for potential business. We've done discussions before about, you know, the 5 major food groups: office, industrial, retail, multifamily, and land. And you can probably add a 6th one, which is hospitality, hotel, motel, which, by the way, they're still hurting. Hotel, motel. There was another article in the paper about hotel, and they're way down. And the summer is going to help. Kimberly, would you mind sliding that back door closed? Thank you. They'll get some benefit from summer travelers, but their business really isn't going to come back until companies start doing their conventions and their business meetings again, which probably is not going to happen until late this year, beginning of next year. So let's just talk about in general, and I definitely want to hear some feedback and what works for you and what doesn't work for you. But we kind of talk about leases and purchases. And if you're not familiar with commercial leases, if you're coming from the residential world, leasing, you really can't make much money doing leases. What is it? Is it a half a month's rent or a month's rent or something like that? Yeah. Whereas on the commercial side, you can make significant income by representing tenants in a commercial lease. And in fact, we could do a number of different scenarios where, you know, I could make more money representing a 5,000 square foot office tenant leasing space in this building than I could working with that same company purchasing a vacant 5,000 square foot building for them to occupy. It's a higher commission rate. And generally speaking, over the 5-year, let's say a typical 5-year lease, you're going to be paying, that tenant is going to be paying about the same, roughly the same amount as they would to buy that empty building. And if they're at best buying an empty building, you might make 3%, or depending on the size of the deal, 2%, because all commissions are variable on the commercial side. So you literally can make more money in many cases representing a company on a lease. So whether that's office or industrial, even retail, although I will throw out the caveat that on office and industrial and working with tenants or companies that need to lease space, for office and industrial, if you're working with the company as they're approaching the end of their lease, and you can get paid a full commission whether they renew or whether they relocate. Still be paid a full commission. Not so much for retail space. For retail space, you can get paid a full commission, which in retail is typically 4% of the gross base rent to be received over the term. You can generally, for a new requirement, but you will find that most developer owners won't pay a broker, an agent representing a tenant on a renewal. They'll work with you, but you're going to have to get paid by your client if you're going to get paid at all. So, but with that one caveat, as lease terminations approach, and with respect to companies that lease space, and the vast majority of companies lease their space as opposed to own their facilities. But when they lease their space, they have a lease. And lease has a commencement date, and it also has a termination date. And as that tenant approaches the termination date, less than a year, they need our services. And whether they get those services from us or one of our competitors, they're going to, in most cases, utilize our services. And I would say any office lease in DFW over 2,000 square feet, 90+% will have an agent representing the tenant. Industrial, anything over the smallest industrial type space will have an agent representing the tenant. Retail, sometimes yes, sometimes no. Certainly all the bigger retails will. So, and the key is speaking to the finding and identifying, and we'll talk about some of this in a second, finding and identifying, who is the decision maker, who makes the decision as to, whether we're going to renew, whether we're going to relocate, or, which broker are we going to use. And we'll talk about some ways that you may already know some decision makers, but you don't know that you know these decision makers. Yeah.
Tell me the benefits between a business owner leasing commercial space versus purchasing commercial space.
Well, number one, leasing, you have a lot more flexibility. You're not responsible for if the roof leaks or whatever, that's the landlord's responsibility. So you can focus on your primary business, right? You're not responsible for accounting and paying the bills and paying the property taxes and doing all of that. Again, you can focus on your business. If you outgrow it or you no longer need the space, let's say you outgrow it. We need to double our size and now we're stuck with this building. And we still have to pay the mortgage on this while we find another place. And how long is it going to take me to sell this? Or, as opposed to ownership, if you own over the long term, and one of the in the CCIM program, one of the courses is about user decision analysis. And when we talk about tenants or companies, they are users of space. And we do a lease versus own analysis. For a particular building, I can lease it or I can buy it. And the price is related, and the price to purchase and the lease rate to lease it are related, directly related. And so you can do an analysis. And generally speaking, if I'm going to be in this location for a long time. And I'm pretty confident that my needs are going to be static. I'm not going to be doubling in size, or if I do need to double in size, I'll just open another location, kind of a situation. Then if I know I'm going to be there for the long term, I'm probably better off buying. If I'm going to be there more than 7 or 8 years and I feel pretty confident my needs are static, then there are advantages. You've got that big down payment up front, which is the biggest negative. However, your year-to-year costs with after tax, you can write off the interest on your loan, you can take depreciation, which is a non-cash expense that allows you to reduce your taxable income, over the long term. So flexibility, responsibility, but also on the ownership side, if I own the building, if the roof leaks, I've got to fix it. I've got to pay the property taxes. I've got to, I'm now a facilities manager as well as whatever my main business is. Okay. All right. So ownership falls into 2 categories: investors and users. And so we're going to kind of continue focusing on the users just for a minute, and then we'll talk about investors. So although the vast majority of companies lease space, some prefer to own, and could be for any reason, but a couple of common reasons are, it's a privately owned company and we've always owned our real estate and it's a family business and I'm going to pass the business down to my kids, kind of a thing. But another, and I had a trucking client, had a trucking business. He and his father were from Bosnia and they owned real estate in Bosnia. They owned a ski resort in Bosnia too. She sent me pictures. It was really kind of cool. So anyway, but he came here and had one facility. They desperately needed to expand. He had orders for storing trucks and storing other containers and what have you. And so he was desperate to find space. But, and I found some possibilities for him to lease. Wouldn't even consider leasing. Leasing is stupid. Nobody, you buy the property and you hang on to it and you pass it down in the family. And so as desperate as he was, he would absolutely refuse to lease. And we did eventually find him something that he did purchase. But some people just, this is what we do, we purchase. And then another reason is if what I use my facilities for is capital intensive. I have all sorts of machinery and things that are this special purpose building. Like my building is special built or what is, you might hear the term, is a purpose-built building. It's built for a particular purpose, a particular use, and involves extra equipment and special design to the building. If I'm going to have a lot of capital tied up in the building, I should own it, rather than have the landlord build the building or pay for all that stuff. I sign a lease, and then whether it's a 5-year lease or a 10-year lease, now the landlord has some real leverage when it comes to renewal time, because he knows how expensive it would be for me to relocate, and so I'm kind of at their mercy. So that's another reason to own. And then on the also on the purchase side, and again, we'll be talking more about investors here in a minute. Investors usually, we all the time, I guess we run into people who are first-time investors, and we have to be careful, a little bit careful on that. I'm a first-time investor. How serious are they? How likely is it, will it be that they'll actually pull the trigger and buy the property if we present them with the right property? So there's a lot of uncertainty there, but most of the investors own multiple properties. They don't just own one property. And if they own multiple properties, then very often, that can be a great client for you, because they may be looking to buy a property now, but they also next month may be looking to sell that property that they bought 5 years ago, that they've redeveloped and improved, and they're pretty much maximizing the value they're going to get out of that property. And now they want to sell that property. And maybe they want to 1031 exchange it into another property. So great source of repeat business. So again, talking on the user side, Qualifying questions, when if you're working with somebody and they're looking to lease space, the best indication that, this could be a good client is they currently lease space. Yes, our lease is coming up. Well, do you currently lease space? Yes, our lease is coming up. We've been in this location for 10 years. We did a 5-year lease. We renewed once. Now we need to move because of XYZ. And so that's an excellent indicator. You've got a qualified tenant because they already lease space. They have a lease and with the termination date coming up. On the other hand, we also run into folks where this is my first lease. I'm starting a new business, or I've been operating a business out of my house, but now I want to lease. And the qualifying process is a little bit tougher. And now we're talking about, number one, they're going to be required to personally guarantee the lease. The landlord will tell them. And so that's a question to hit them with right up front. Are you prepared to personally guarantee the lease? And then the other typical questions, do you have the funds? And the landlord is going to look at their financial statement and make sure that if this is the first lease, that they have funds for any of the upfront costs. And they're going to want to look at their financials to see if they've been operating their business without having to pay rent. Are they going to be able to operate their business if they pay the rent that I'm proposing to them? So they'll factor that in. And also, do they have realistic expectations regarding availability, price, and terms? What's that?
That's a big one.
Yeah. And I've certainly mentored a lot of new people in the business. And one of the toughest things is when you're new to the business and you're out there and you're trying to generate business and you've learned, so much, and you've got your mission statement or your value statement, I should say, that you can spiel to the potential client. And then somebody says, yeah, I'll work with you. Help me find some space. And oh boy, and I'm off to the races to try to find them space or opportunity. And if they don't have realistic, besides if they aren't qualified and don't have the money, or if their expectations are unrealistic, then we need to get that squared away right up front. Otherwise, don't waste your time, move on, because all we have to trade, if you will, besides our knowledge and our resources, is our time. And if we're wasting time on a deal that's never going to happen, and I can tell you, I've wasted a lot of time on a lot of deals where, well, they have unrealistic expectations about, what it's going to cost to lease space. But when I show them what's out there, they'll realize it and they'll be willing to pay, twice as much as they think they have to pay. Well, most times that's not going to happen, and they'll find some other solution or whatever. So if the deal is not going to, if the expectations are unrealistic and you can't show them the information and change those expectations, very often you're better off just moving on.
I have another question for you, Mark.
Yeah.
When you go back to having realistic expectations of, terms or rate pricing and all that, do you find that owners or landlords are willing to negotiate on the price per square foot when it comes to leasing retail space, or is it typically a set price?
There is usually some negotiation. And what most landlords would prefer, and this goes into financing of the building and the building valuation and everything else, are willing to negotiate upfront concessions.
Like,
Free rent, reduced rent in the first year, maybe some additional construction dollars. I'm working on one right now in Preston Center where they're even giving them, because they're taking a spec space, they're giving them a moving allowance, whatever. And a little bit of a break, and 3 months free rent, whatever. But the point being, from the landlord's perspective and the lender's perspective on the building and the valuation perspective, the net operating income, cap rate, value. Once those initial goodies are gone, now I have a solid lease that pays market rent, right? And so that's what they're looking for. So what you're not going to find in most cases, there's always an exception to everything, is someone who's willing to just reduce the rent all the way across the board by 15% or 20%, whatever. Well, what if I take the space as is? It's been vacant for a year. If I take the space as is, I know your asking rate is $30 a square foot, but hey, you're not getting any money on it anyway. Why? I'll pay you $15 a square foot. Again, for all those reasons, the lender and the valuation, they are better off letting that space stay vacant at $30 a square foot than leasing it to a tenant at $15 a square foot.
And then when it comes to TI allowance on a white box space, say for instance, I have a client and we're already working with an architect from GC, so we know how much it's gonna cost to build out a space that.
Is this a retail space, office, what?
Retail.
Okay.
Do I let the landlord tell me how much TI dollars they're gonna give me, or do I let them know this is how much my client is wanting in TI dollars?
Well, okay, so that gets into, actually, that was the other topic we did 2 meetings ago, was the whole request for proposal, counter proposal, letter of intent, right? So if I have specific needs, I'm going to ask. I always prefer to start out with a request for proposal. Now, in retail in particular, the owners will often say, well, just send us a letter of intent. Well, letter of intent is an offer. And if I send a letter of intent, the worst thing that could happen is they say yes.
Okay.
You don't want that. You want to have them put their cards on the table first. So here's my request for proposal. Now, in that request for proposal, yes, I can say that, the build out my client requires, we're looking for, please provide us with a tenant improvement allowance of $40 a square foot or whatever that might be. And they'll respond with what they can do. On the other hand, if you let them propose it, they might propose $15 a square foot. Well, that's a long way from there to $45 a square foot. So yeah, I always prefer, for the reasons we talked about in the last meeting, send me, I'm going to give you a request for proposal telling you what I need, and then you propose, hopefully some competitive terms. And also, much like we discussed in the last meeting, you want to have be doing that with more than one building. If the landlord knows you're only looking at one building, he's going to be less competitive than if they think that they're competing for your business with 2 other buildings. Okay. All right. Well, I think I need to move along quickly. So again, who makes the decisions? Who makes the decisions for the company? And I've been burned by this one a couple of times. Is the person who makes the real estate decision the same person who makes the decision as to which broker to use? And I have worked with facilities people who on their title, on their card, on their responsibilities, they are in charge of real estate for their company and they have multiple locations, whatever. But somebody else, like the CEO, makes the decision as to which broker they're going to use because they have a friend or whatever. So get that information up front. And if it's a lease, especially if it's a small lease, by the way, bigger companies, medium-sized, bigger companies, all use real estate brokers to represent them. I'm talking the biggest companies in the country use real estate brokers, okay? And it's the typical people who have put up some resistance are really small tenants who think somehow that if the landlord is going to pay your fee, if the landlord is going to pay you 4%, then I'm probably paying 4% too much. And so therefore I can negotiate a better deal myself. And that's hogwash because they don't know what they're doing, but we do, right? And we do this all the time and it's a process. User owner, again, we talked about users who prefer to own as opposed to lease and the reasons that they might want to do that. On the investor side, when the very first question I ask when somebody is introducing me to a new potential investor or a new potential investor wants to meet, and that investor is looking to buy multifamily properties, let's say. The number one question you need to ask is, do you currently own any multifamily properties? Now, if the answer is yes, and they say, I own 6 properties in DFW, and I own 12 properties in Phoenix and 3 in Houston, suddenly my interest level is up here, right? On the other hand, if they tell me they're looking for multifamily properties, and I say, do you currently own any multifamily properties? And they say, well, no. And then my second question is, do you own any commercial properties? And if they do, and then they own shopping centers or office buildings, okay, then I'm still interested. But if they say, no, I don't, not only do I not own a multifamily, I don't know any commercial properties, I guess the last thing you can ask them is, do you own rent houses? And if they don't do that either, then you have to ask some more questions and try to determine, is this really worth my time? Because I could be spending 6 months educating this person on what's involved and what the market is. And at the end of that, I have no idea whether they're going to be willing to pull the trigger and actually write a big check to purchase an investment property. And that's going to, ultimately, I guess everybody owns their first investment, or maybe it's passed down to them from they inherited, who knows? So why are they looking to buy? Ideal motivation is, I'm about to sell one of my properties and I need to 1031 exchange into another property. Okay, that's real motivation. Or they have extra money that's just not earning anything, sitting in the bank, and they already own other properties and they need to invest this money. Do they have to? Have to. One of the reasons I like leasing and representing tenants is there's the have to aspect. That is, I've been in this space for 4.5 years. My lease is up in 6 months. And so I have to either renew or relocate. Investors never, very rarely, except in the 1031 situation, very rarely have to invest. They can, want to invest and they can have the money, but they don't have to. Again, with 1031 being the exception. So understanding what their motivations are. And again, it goes back to, if they already own a bunch of properties, they're familiar with the market, their expectations are reasonable, you're going to want to work with that person. Especially if you're working with a small or first-time investor, or let's say small investor, have they worked with brokers before? Now, personally, I don't like to, if I'm working with an investor, especially the first time I'm working with a particular investor, I don't want to do an exclusive representation agreement. So let me differentiate. On a lease transaction, if I'm representing a tenant on the lease, I always want an exclusive representation agreement with that tenant. I don't want to be out there trying to find them space while somebody else is trying to find them space, while they're out there trying to find space on their own, whatever. That doesn't work. And it doesn't work for a lot of reasons. Not just it doesn't work for me, but if I'm, the leasing agent who has 3 different people calling them about the same tenant, it causes all sorts of problems. So on a lease, you definitely want an exclusive representation agreement. And I've told clients, hey, if you're not happy with the service, fire me. But during the time that you're working with me, you're only working with me. And that's the only way I work, right? However, with investors, because they don't have to do anything, and you're never really sure, unless it's a 1031, you're never really sure if they actually are going to, pull the trigger, as I said, and write a check. I prefer to do just an open representation agreement, which basically we have our own, 1-page agreement, which basically says, if I bring a property to you and you're interested in it, then for the purposes of that property, I'm your broker. And I'll do everything I can to help facilitate a transaction. And if we're successful and we close, then I get paid, and I get paid this much. Because so many investors are time wasters. If I had $100 for every multifamily investor who wants to buy, let me say, I want to buy multifamily properties. I want to buy anything between 50 and 150 units. I would like a C minus B plus, C plus B minus property in kind of a C market, C or B minus market that needs work, and so that I can buy it at a C price and then put money into it and turn it into a B plus A minus property and get B plus A minus rents. And if I had $100 for every investor who wanted some version of that, I'd have a lot of $100 bills is what I'd have. But wouldn't need to make any commissions. There are millions of them out there. And unfortunately, the properties aren't out there to find them. But if they have realistic expectations about what's out there and what's not, then there's possibility that we might be able to find something for them. This last one I just threw up here, it's not, having the lease listing agreement on a building like this or a shopping center or an industrial park is not, if you're new to the business, chances are it's not something you're going to get right away. Because landlords generally are looking for people with experience who've done a lot of leasing. But if you do have a lot of leasing experience, even if that leasing experience is representing tenants, you get to know a lot of landlords and they get to know you and your experience, and there are opportunities, and those could be great opportunities, especially in a multi-tenant building where you have the exclusive listing to lease property, renewals, new vacant space, whatever, in a particular property. And I started out my career many years ago doing mostly that. So some action items. Review your client list, acquaintances, friends. Are they business owners? If they're business owners, they absolutely positively make the decision regarding, their real estate, whether they lease or whether they own. Wealthy individuals and professionals, doctors, lawyers, tech folks, most of them want real estate as part of their overall investment portfolio. If you know anyone, and I've got this on the next slide too, I think. How about think of all your friends, acquaintances, and everything else who have real jobs, not like us. We don't have real jobs. We're contract and we live on 100% commission. But people have real jobs, the kind where money gets deposited into your account twice a month automatically, one of those. What do you call those? Those are W-9 jobs or W-2 jobs or something like that. Yeah. So anyway, if you know someone who has a real job and they are middle manager or above, chances are, if they aren't the decision maker, they know the person at their company who is the decision maker, and potentially, if not giving you just their name and phone number, but maybe even a warm introduction. Working here at a big office like this, referrals from residential agents. I think a lot of our group, does well with referrals from residential agents. And lastly, like I said, past and present clients. Think about if you were in residential, you sold a house or represented somebody buying a house worth, $400,000 or more. Chances are they're some type of a decision maker, or they know the decision maker at the company they work at, or they own their own business. And then last item here, some of the services that you use. I mean, if you have an insurance agency where you get your life insurance and they have an office somewhere, that's a possibility. Your CPA, daycare, a lot of daycare properties trade. Your church. Strangely, I'm working on 3 different churches right now. I just closed one church lease, and I'm working with 2 other churches who are looking to buy. In fact, we made an offer on one yesterday morning. Unfortunately, they may be getting in 2 other offers too. So one of those competitive situations. Anyway, so I know I ran a little bit over time. So that's really all I've got. I don't know if Rebecca or Kimberly, you want to add. I mean, Rebecca and Kimberly, who are members of our group, Central Commercial Group, have done a great job, and their business has really picked up. And it's kind of, what we told them in the beginning, that it's harder to get started in commercial. It takes a longer time to ramp up. But if you do what you're supposed to do, at some point, it all starts coming back to you. And so I don't know if y'all want to add anything about what you've done.
I think it's also person-wise, like which thing you're better at or you enjoy. Like I enjoy canvassing. I take flyers and canvas for businesses, industrial, flex space. That's my.
Yeah, oh, let me interrupt you. So Kimberly came from she worked for a big company and was involved in their distribution, warehouse distribution. And so she wanted to focus on warehouses or whatever, and she's done a really good job of that. So go ahead, sorry to interrupt.
So I found that cold calling, I'm not real great at. I mean, I can do it, but I'm not real great. But canvassing with my flyers and going to the businesses and talking to the business owner, the decision maker, really is where I get a lot of mine and referrals and different things. But you have to also be consistent. I also take other folks' listings and take those places and do things with them. Networking, I also do a lot in networking. And also, I country dance, ballroom dance, and I'm actually getting a lot of folks. I just got one a few minutes ago where it's another dancer. And he's in a business and he knows the decision maker and they're looking for an agent to find some flex space for them. So, if you're in other different groups too, you always let them know what you do. So there's a lot of different, I don't just focus on one thing. I kind of, it's subtle, but there's also a couple of things that I'm like, that's not what I do or focus on.
Mhm.
Becky, do you want to?
Yeah, I think that just knowing that you can handle any type of transaction, so if you strictly just do residential, know that I went out door knocking last week.
Rebecca, speak louder, they said they can't.
So I went door knocking last week and
I'm just going to stand here rather than take this off my neck. Yeah.
and as I was door knocking, the gentleman said, "Do you do residential?" And I said, "I am your one-stop shop to handle all of your real estate needs. If I cannot do it, I'm going to get you to the person who can. So yes, I can do residential," and I picked up a residential transaction. So I've made it part of my everyday business. When I sit down with a client, I tell them, this is what my business is, and I go through how I help people with commercial transactions. I also state that I'm in the business of doing business just as you are. So my business is built on referrals, just as yours is. Please think of me, you put that in their head, please think of me for residential need or for real estate needs when you're doing business, so you can refer to me as I can refer to you. And I talked to them about residential as well. I just recently referred 2 transactions to a residential agent that refers to me, and one of them is already under contract. So I think the most important thing is to understand that you can do all types of transactions, or you can work with someone who can. So that's very important as a residential agent. And as Kimberly had mentioned, we all have our little strong suit. Mine's cold calling, but always be on the lookout for all types of opportunities. So when you sit down and you meet with a client, talk to them about all of their residential needs. You should be doing that anyway, or not residential, but all of their real estate needs, because you should be getting to know your client anyway. So, referrals are a big part of everyone's business, and if they're not, they should be.
And I think building on what Rebecca just said, that I want to emphasize is ask. Don't assume that just because they know you're in the real estate business, or for me, that, oh, I know Cliff, yeah, he's a commercial real estate guy, that anytime I walk past somebody, they're going to think about all the potential commercial referrals that they might have access to one way or the other, directly or indirectly. They're not going to think about that. They're thinking about their own stuff, right? But if you stop them and you have a conversation and you say, hey, by the way, you have any commercial referrals for me? I had one agent many years ago who was really, really good at this. Just, very friendly, but constantly ended every conversation with, hey, you got any referrals for me? Hey, you know anybody with this? How about so-and-so? Who does he work for? Give me his name and whatever, and just constantly. And she did very, very, very well just with that kind of approach. So anyway, any questions or anything? I think we're about wrapped up here.
Can I
Yeah.
say one more thing? My neighbor, who we walk our dogs together, we talk to each other on the telephone. And she knows that I'm in commercial real estate, and I never explained to her what I do. So as we're walking the dogs, she says, we just expanded our office from 2 locations to 1 large location for a lease. And I said, and you didn't call me. She said, I didn't understand what you did. It broke my heart that she said that. So no matter if you do residential or commercial, just like Cliff said, you constantly tell people.
Ask, yeah, just, yeah, you can be friendly, but you don't have to be annoying, just ask. Don't be, okay, well, thank you, everybody. And we'll see you next month at next month's commercial forum.